Hello everybody, it's Crypto Dreams here with another knowledge dump. So what I'm working on right now is a crypto plan for 2023 and the end date is uncertain. It could be 2030, 2040, 2050. I'm doing a lifelong crypto plan. So some of these cryptos I'll be trading in and out of for profit. Those trades will be linked to specific funding ideas. So for example, if I want $1,000 in profit after tax to go into a certain small little project, that'll fund that project. This other token will fund this and fund that. So that's the idea. I'm developing, like I said, this is a two-stage approach. I've been talking about it in my other channel that I deleted, and I'll get into that later, not in this video. But there should be two ways of thinking about trading for crypto. One should be trading by the market cycles. Others should be traded for long-term perspective, 2030, 2040, like what will Bitcoin be worth in 20 years from now, 30 years from now. It's either going to go to zero or going to go to millions of dollars, right? So I'm creating a two-prong approach. One is a long-term approach. One is a short-term approach. One will be like trading in and out of things. Others will be just DCAing for over a year to be sold within a year, over a year, 5 years, 10 years, indefinitely, who knows. And there's different trading approaches that you need to develop, and you need to observe, you need to shit test, and you need to tailor. And you got to give yourself time to tailor it. So we call them sprints. And when you're dealing with cryptocurrency, you're dealing with software, you're dealing with technology, whatever, you know. So in the Silicon Valley, they deal a lot with agile, cycle, life cycle. There's four of them. There's iterative, incremental. There are the adaptive approaches. Then you have predictive, and predictive, and I'm forgetting the other one right now. But you have these different life cycle approaches. Sometimes adaptive is the other one. So you know, different phases you might have to adapt to uncertainty. So you have to use a different approach to uncertainty. If you have something that's predictable, then you can use another approach. Then there's something called progressive elaboration, where you might know information up front, but you can plan it out, but you don't know what's going on after that process. And you just kind of know what's going on at a higher level, but you don't really pay too much attention to it because you're working on the first iteration, which would be to make it more user-friendly, more quality, and that type of thing. So when we're talking about investment approaches, the overarching, when you run this through a project, you have to ask yourself, what is the objective to investing? Do you want to make $1 million? So that would be like the reason to make the project happen, to initiate the project, is you have to have a goal. You have to have something that's going to give you value, and that's the reason why you want to move in that direction. So making $1 million in crypto is very achievable, but you have to figure it out. So it needs requirements. There's a lot of who, what, where, why, and how. There's a lot of statements. There's a lot of parameters. Like, what is your risk tolerance? What are you willing to do? All that. So after you go through all that, you'll come up with some type of document that will give you exactly what you need to do to go ahead and do it. So when we're dealing with technology, you need an adaptive approach because there's a lot of uncertainty in cryptos. There's a lot of volatility. And you have to be aware of this stuff and decide how you're going to approach these difficult challenges. To be able to achieve the outcome that you want, which is, to become a millionaire in crypto, let's say. And in order to become a millionaire in crypto, you also have to, when you make the money, you have to sell your crypto, and you can't lose your objective. So if you are lucky enough to get to $1 million in crypto or close there to it, and also like if the objective is to make $1 million in crypto, well, let's just say make $1 million in general, perhaps you made $500,000 and $600,000 in crypto, $500,000 after taxes. Well, then you could possibly take that money, put it into something that's more conservative, which then could yield you that $1 million. So when you're doing these investment approaches and coming up with your goals and what you want to do, you have to also think about when you're going to sell, when you're going to buy, how much risk are you willing to accept. And these tokens, they can go from a lot of risk to less risk. Like Bitcoin would be less risky compared to Shiba Inu, for example. However, you can make a lot of money with some of these other tokens that are more volatile, that haven't been discovered yet by the market and that type of thing. So I have a DCA approach, which will be my long-term investment approach. And then I have the active trading, which will be the short-term gain. So that's what I'm developing. Also a Bitcoin Forever plan or strategy. I plan to hold Bitcoin for pretty much my whole entire life, possibly even giving it to people when I die, or if needed, I can use that for my retirement when I get older. So, now retirement, generally speaking, is you need to be secure in being able to live, like have food, shelter, water, healthcare, that type of thing into the future if you were not able to work. So that's kind of like what retirement is. Very simplistic, but having a Bitcoin Forever approach, I think is very intelligent. Maybe even to a lesser extent, an Ethereum, idea, because I think there's going to be an Ethereum ETF. I think there's going to be an AVEX ETF, an XRP. There's going to be a few ETFs for the crypto space. We're just getting started. So, having this type of approach for a long-term 2030, 2035, 2040, 2045, and 2050, for some period of time is very smart, and you should be thinking in the long-term perspective. But also, what approach are you going to use? You're going to use a contrarian investor approach where you go against whatever the groups go. And what does that mean is you want to be early before the market has a chance to determine what the value is of what you're holding. So like in 2022, nobody wanted crypto, was very risk averse. There was a lot of bad things happening and just money was just flowing out of it. So the market was irrational at that point. So if you were to buy crypto in 2022 at the bottom of the bear, now that the market is not irrational, is now coming back in because it is not irrational, well then the market is now coming back and determining the prices are too low and they're coming up. So markets are driven by people and the way people perceive things. So normally people are irrational, and they got the knee-jerk reaction. So if you don't fall in line with that, you're 9 times out of 10 going to be on the right side of history. So for just history has proven that this pattern is very stable and very consistent, being a contrarian investor. So like D-Race was 15 cents, it got up to 75 cents. It's crazy. AVAX was $9, we hit 40. And we're talking, by the time the market realizes how irrational it is, it's a knee-jerk reaction where just the money just all of a sudden pours into that asset. So, these are the things you need to think about and observe, and then you need to put this on paper so you have an artifact that you can always reference to. And like I said, sprints could be a week, 2 weeks, a month, or whatever, but they're short in duration and you're continuously improving upon the lessons that you learned. So you can use this data in real time to actually facilitate real change. Because the data, if you just collect data and information, and you don't use the information, it's just dead information and it's just a waste of time. So the whole thing is to not waste time when we're talking about crypto investing, because time is money. Things were a lot cheaper 3 weeks ago than they are today. If you wanted a brand new car, good possibility, you know, if you were in the right tokens, you put $5,000, $6,000 in 3 weeks ago, now you can buy a brand new car, cash, after tax. So we need to be thinking in terms of the slow way of making money, the fast way of making money, force multipliers, that type of thing. There's a lot that goes into this. So the quicker that you can start with your project management skills and start instituting real change in your life on how you are or not adapting to the change. You need to be working on yourself as well as your strategy, and you need to be in action to do it. It's extremely difficult to change yourself and all. But if you do something every single day and you make your mistakes and then you fix your mistakes, which is called change management, that'll help to lower your risk. And the more you're aware of this stuff, the better off you are. I suggest whether you want to get a project management professional certification or not, you should be studying these principles, actually physically every single day studying. Also, Michael Saylor's Academy has all kinds of free information, college courses and all that for this stuff. But you got to stop being comfortable. You have to be comfortable being uncomfortable. So as I'm going through this, I realize that I'm too risk averse and I need to be more risk. My appetite for risk has to be higher. So I realized that I need to get more into degen tokens than what I am now. And some of my plays of crypto are too conservative. So I need to lessen my bags of, like, let's say XRP and maybe some other tokens, take that money plus some other money and maybe, you know, sell some gold and silver and then put it into other driven assets that are more likely to go to 10, 15, 20, 30, 50x. And to be a force multiplier for my portfolio, because then at some point in time I could sell, I'll have a boatload of money, and that boatload of money can then be invested in more conservative assets that are more long-term and more advantageous to my life and me being a good steward of the community and being able to give products and services to other community members, as well as to donate my time and effort and resources to better my community, which then will just come back to me and benefit me more and more. So if your life isn't where it needs to be, honestly, you need to be studying this stuff. Every single day, you need to be, just go on YouTube if you don't want to really do too much effort in the beginning, and just Google project management professional certification, different concepts, learn these concepts and start applying them to your life. We all can get rich. We all can be financially rich, or however that's defined, but you have to take the effort and the steps and incrementally do something every single day. It's not what you do on the weekends. It's what you do every single day, even if it's a little bit of reading, a little bit of understanding, but you have to also track this data and then be able to use the data. So that's why you need these artifacts, these documents that you can create in an Excel spreadsheet and put it on your desktop, and every week you look at them. That's called your iteration, or your sprint rather. You use this information, these assets for you. So we all can do this, and I suggest you should do it fast, because there's a lot of money coming into the crypto space, and this could be the biggest cash machine you could ever imagine in your life, and this is only in a short period of time. Because in the future, bull bust markets, it's going to be less volatile. You'll have less opportunity to make money. So I hope you enjoyed this video. Please like and subscribe. Talk to you soon.